Hello, hope you're having a wonderful day. Thank you for listening once again. This is the Belk on Business podcast, and I'm Josh Belk with Belk and Associates. Today we're going to talk a little bit about a different approach to accounting and discussing profitability. Typically in our U.S. accounting system, we have what's called generally accepted accounting principles. And they're kind of the term generally accepted, a little bit of an axiom. And our accounting system is one that's kind of really, you look at, you have your sales, when we're talking about the profit and loss side of the books, you have your sales, you have your expenses, and then what you have left over is considered profit. And I'm sure for some of you that are watching, some of you may have read this book, and you can actually see it, but it's Mike Mikolowicz here wrote a book called Profit First, which is really interesting. I can't say I agree with 100% of what he says in the book, but I think it's really interesting as he works through talking about how do we look at profit in our business. And I'm going to talk a little bit about that in these next few minutes in this podcast. So most business owners, they start up a business, very intelligent and driven people, yet we see that over 80% of businesses fail in the first 5 years. They simply don't make it. And most of these businesses fail due, number one, statistics tell us, to a lack of experience of the business owner. It doesn't mean that they don't know what they're doing when it comes to delivering their product or their service. It just simply means they just don't have the business principles in place that they need to be able to sustain their business. But the second reason that we see most businesses fail is simply just a lack of profitability or simply cash flow issues, so issues related to cash. And so they go in and they get this business rolling, and they just simply don't understand the financial aspects or the financial portion of their business. And so businesses, they start for usually one of three different reasons. Usually it's people, process, or product. And most business owners have a passion for what they're doing. So they have a passion for the people they work with. They have a passion for the product. They have a problem they're wanting to solve. And they get out there and just really, they're just passionate about what they do. I know in my business as an accountant, I'm really passionate about what I do. I love what I do. I love the people that I get to work with. But that's just simply not enough. Business owner does need to understand the financial side. And most business owners, they find that side of their business just an absolute struggle. They find it frustrating. Maybe they'll hire a bookkeeper, maybe they'll even get an accountant, and they'll work with them, and they get these reports, and they simply just don't know what to do. And many times that's simply because of the faults in our accounting system that we have here in the United States. Many business owners get frustrated because they have to, their accountant or their bookkeeper say they have to book things in a certain way. And from my end, and I understand it, in my business, we do prepare financial statements, and we do this for our clients. Banks require them. Others, investors may require them. And of course, we have the tax compliance side, and we, of course, prepare tax returns, and that follows pretty much the same type of a format. Different types of rules, but essentially it's the same thing. Here's our sales, here's our revenue, here are our expenses, and then we have what's left over that a business owner will get taxed on. And so you have these elements that are very confusing. You have these terms like depreciation, you have these terms like amortization, you have these elements that don't really make a whole lot of sense as it relates to a business's profitability, which leaves many times an owner just to kind of just hop onto their computer in the morning and take a look at their checking account balance and okay, this is where I'm at, and they just simply spend what they have. And that's kind of how they go about pretty much running their business. They're looking at this daily, they're looking at this weekly, they're coming in and they'll meet with their bookkeeper, they may meet with their accountant, and they say, okay, well, you made X amount of dollars. And they look at their bank account and they say, well, where's the money? And they feel like, and it has in many ways, that the accounting system that we have has failed them. And I'm not necessarily going to give much in the way of solutions here in this podcast, and we may do that in future podcasts. I just want to kind of discuss as far as some of the issues that are there, and then maybe just a thought or two as a takeaway on the back end of this thing. And for a big reason, the reason why that a lot of times the traditional method that we have fails us is because we have a profit and loss, and then I have to go and look at a balance sheet and see, okay, where did I spend money on my balance sheet? So I have assets that I've gone and purchased. Then I have this depreciation element. And then if I want to know where my cash goes, I may go and look at a statement of cash flows. But the problem with the statement of cash flows, it starts with net income. And so kind of all this just generates an awful lot of confusion. And another issue out there is the balance sheet. We have we're going and you go and you purchase assets and you look at, okay, well, where did my cash go and what is my business worth? And I have these assets that are depreciating on the books, and I have to expense them even though I've already spent the cash before, and so things aren't lining up exactly the way that the cash has gone out the door. Then look at my balance sheet and it looks like that I'm upside down, that maybe I'm in a negative equity position when I know my assets are worth more than the books say that they are, and then that creates issues with the banker, and so all around we're just simply frustrated. And so many times when we meet with a client, I'll look at them and say, you know what, let's set up your books in a way that's understandable to you, and then allow for me as your accountant to be able to just simply take the data as it's entered, and then massage that data to be able to meet whatever sort of end product, whatever that deliverable is that we need to produce, whether it's financial statements or tax returns. In the book Profit First, which I really do like, he kind of goes through and he just looks at the business owner and says, hey, let's simply change the way that you're doing things. So instead of the sales minus your expenses equals your profit, let's kind of move that profit element up. And so we're going to take your sales less your profit, and then what's left over is your expenses. And so many times as a business owner, we need to understand a couple things. First of all, understand why you're doing what you're doing. So what is your purpose? What do you need out of your business? So taking a look at your personal budget to make sure that you have those the elements of that your business is able to produce what it needs to be able to pay your bills, and then have a profit percentage built in. And part of this particular philosophy, which of course isn't generally accepted accounting principles, it's not tax-based accounting, but what it does is essentially it allows for you to take kind of a predetermined profit. And in the book, he recommends 1%, that you start off there and then you build up from there, and you take it and you put it into a separate bank. You put it off to the side, and then you work with what's left. And you go through and you take your taxes. A lot of times businesses fail because they aren't planning on a tax end. So take some tax money, whatever that number is, and put that off to the sidelines. That way those elements are taken care of. Because naturally, we as business owners will take a look at our bank account and we'll spend what's there. We'll go through and we'll figure out a way to manage what's there. Since business owners generally are they're very ingenious, they have a lot of ingenuity, so they'll figure it out with working with what they have left. And so just a couple items here. First of all, kind of understanding maybe a little bit where our accounting system fails us, where you as a business owner might be a little bit frustrated. Then maybe just to prompt you to kind of have that conversation, or maybe consider just mixing things up a little bit with the way that you are handling your books, to be able to have them structured in a way. Number one, almost kind of an accounting hack, or psychologically move things off to the sidelines. To be able to plan, to be able to make sure your business does have some profit, to make sure that your tax issues are taken care of, that you're being compensated for your work, and then figure out a way to work with what's left, and find ways to make your business more efficient. Maybe that'll help you in generating the KPIs that you need in your business. Hope this brought some value to you. Once again, this is Josh Belk. Thank you for listening to the Belk on Business podcast. Have a good day.